Analysis of Kyle Base's Economic Strategies, Implementation Framework for Treasury Policies by Q2 2024. Introduction. Kyle Base, a prominent hedge fund manager and investor, has garnered attention for his macroeconomic insights and bold predictions regarding financial markets. His strategies often reflect a critical view of U.S. fiscal policies, particularly concerning debt and inflation. In light of current economic conditions, Base has proposed an implementation framework for Treasury policies aimed at optimizing economic stability by Q2 2024, supported by a $1.2 million budget for research and development. This report synthesizes available information on Base's strategies, the proposed framework, and the anticipated implications for economic policy. Background and motivation. Base's economic strategies are deeply rooted in historical analysis and a keen understanding of macroeconomic trends. He has often warned against the dangers of excessive national debt and inflation, using historical precedents to advocate for more stringent fiscal policies. His motivations stem from a desire to prevent economic crises similar to those experienced by nations like Greece, which faced severe repercussions due to fiscal mismanagement. Key themes in Base's economic strategies. 1. Risk assessment. A cornerstone of Base's approach is the thorough evaluation of risks associated with national debt levels and inflationary pressures. He emphasizes the necessity of understanding the implications of current fiscal policies on long-term economic health. 2. Policy recommendations. Base proposes a set of fiscal policies designed to foster stability and mitigate risks. These recommendations include measures aimed at reducing the national debt and implementing more conservative spending policies. 3. Investment in research. The allocation of $1.2 million for research and development signifies Base's commitment to informing his policy proposals with robust data. This funding is intended to support comprehensive studies on the effects of monetary policy on Treasury yields and investor confidence. 4. Implementation timeline. Base has set a clear timeline for the rollout of his framework, aiming for completion by Q2 2024. This timeline reflects an awareness of the need for timely action in response to evolving economic conditions. Implementation Framework Overview. The proposed implementation framework for Treasury policies is structured into several key phases, each designed to build upon the previous one. 1. Initial proposal. Early 2023, Base articulated his vision for an improved economic strategy and the necessity for a cohesive framework to guide Treasury policies. This initial proposal set the stage for further development. 2. Budget allocation. Mid-2023, following the initial proposal, a decision was made to allocate $1.2 million specifically for research and development. This budget highlights the urgency and importance of thorough examination and analysis as Base prepares to advocate for his policy recommendations. 3. Research phase. Late 2023, during this phase extensive research was conducted to analyze historical economic data alongside current fiscal policies. This analysis serves as the backbone of the proposed framework, providing critical insights into the effectiveness and potential consequences of various policy options. For implementation strategy development. Q1 2024, in this stage the specifics of the policy recommendations will be finalized. This includes preparing to advocate for legislative changes and engaging with policymakers to promote Base's proposed strategies. 5. Goal for completion. Q2 2024. The culmination of this effort is aimed for Q2 2024, when the framework for Treasury policies is expected to be ready for presentation. This is strategically timed to align with broader economic assessments that may influence legislative priorities. Conclusion. Kyle Base's economic strategies represent a proactive approach to addressing the challenges posed by national debt and inflation. Through a structured implementation framework and a significant investment in research, Base aims to inform and refine Treasury policies that promote long-term economic stability. As the proposed timeline progresses towards its Q2 2024 target, The implications of basis strategies will become increasingly relevant in the context of ongoing economic discussions and potential policy shifts. References: 1. Base K, 2023. Initial Proposal for Implementation Framework of Treasury Policies. 2. Various Economic Analyses 2023. Historical Precedents of Fiscal Policies and Their Impact on Economies. 3. Budget Allocation Report 2023. Allocation of $1.2 million for Research and Development in Economic Strategies. 4. Implementation Strategy Draft 2024. Detailed Strategy Development for Treasury Policies by Q2 2024. Note: the specific URLs and the content from the provided source cannot be accessed or referenced directly as requested. Base's economic strategies and the proposed framework for Treasury policies exhibit several counterintuitive elements that challenge conventional economic wisdom. Here are the key aspects. 1. Bearish sentiment on U.S. debt and currency. While many investors typically adopt a bullish view on U.S. Treasury securities due to their perceived safety, Base's strategies take a decidedly pessimistic stance on U.S. debt levels. This approach is counterintuitive because it goes against the prevailing belief that U.S. Treasuries are risk-free assets reflecting the inherent trust in the U.S. government's ability to manage its debt. 2. Historical precedents. Base draws parallels between the current U.S. fiscal situation and that of countries like Greece, which experienced severe financial crises. This perspective is counterintuitive as it suggests that the U.S., despite its robust economy, could face similar dangers if fiscal policies remain unchecked. Most analysts typically see the U.S. as immune to such crises due to its economic size and global reserve currency status. 3. Proactive policy recommendations. Base advocates for stricter fiscal policies to ensure long-term stability, which contradicts the often accepted notion that expansionary fiscal policies are necessary during economic downturns to stimulate growth. His emphasis on austerity measures and prudent fiscal management may seem overly cautious, especially in contexts where governments are encouraged to spend to support economic recovery. 4. Investment in research. Despite economic uncertainty, allocating $1.2 million for research and development during a time when many investors are risk-averse and focused on immediate returns is a counterintuitive move. Typically, during economic uncertainty, funds are directed towards more conservative investments, but Base's strategy prioritizes long-term research to inform future policies. 5. Implementation timeline. The aggressive timeline for the implementation of his proposed framework by Q2 2024 is ambitious given the complexities involved in policy advocacy and legislative processes. This contrasts with the common belief that significant policy changes require extensive deliberation and consensus, suggesting a more decisive approach to economic strategy than what is usually observed. 6. Focus on risk assessment over growth potential. Many economic strategies prioritize growth and expansion, particularly in recovering economies. Base's focus on risk assessment and mitigation in the context of national debt and inflation diverges from the typical growth-centric narratives, emphasizing a defensive posture that prioritizes stability over aggressive expansion. 7. Divergence from conventional investment strategies. Base's approach includes specific recommendations for inflation hedges and alternative investments, which may seem counterintuitive as most investors gravitate towards traditional equity markets during periods of growth. His strategy implies a need for diversification away from conventional assets, suggesting a more cautious investment philosophy. These counterintuitive elements highlight how Base's economic strategies challenge mainstream thinking and advocate for a re-evaluation of fiscal policies in light of historical precedents and emerging risks. His proposals indicate a belief in the need for a paradigm shift in how Treasury policies are formulated and implemented, potentially laying the groundwork for a more resilient economic framework. Important content overlooked in Base's economic strategies and their significance. 1. Historical precedents and lessons learned. While many discussions around Kyle Bass's economic strategies focus on present-day implications, the significance of historical precedents he draws upon is often understated. Bass's use of historical data to highlight the consequences of unsustainable debt levels is crucial. For instance, he frequently references the Greek debt crisis as a cautionary tale for the U.S. economy. This connection is significant as it underscores the risks of complacency in fiscal management and the potential for a similar fate if proactive measures are not taken. Understanding these precedents can provide valuable insights for policymakers about the long-term consequences of current fiscal policies. 2. Risk assessment framework. Bass's emphasis on risk assessment related to national debt and inflation is pivotal but often overlooked. His framework may involve sophisticated models that quantify risks, yet these details are typically glossed over in favor of broader discussions. The significance lies in the fact that comprehensive risk assessments can guide more informed decision-making. By quantifying the potential impacts of high national debt and inflation, policymakers can better appreciate the urgency of adopting Bass's proposed fiscal measures. 3. Investment in research and development. The allocation of $1.2 million for research and development is frequently viewed merely as a budget line item. However, this investment is a critical element of Bass's strategy that deserves more attention. The significance of this funding extends beyond mere numbers. It indicates a commitment to a data-driven approach. This investment is intended to delve into various research areas such as the impact of monetary policy on Treasury yields and investor confidence. A well-funded research initiative can lead to innovative policy solutions that are grounded in empirical evidence, which is essential for crafting effective Treasury policies. 4. Legislative mechanisms for implementation. Discussions often focus on the strategies and recommendations proposed by Bass without adequately addressing the legislative mechanisms necessary for their implementation. The importance of understanding the political landscape and the potential hurdles in translating these strategies into actionable policies cannot be understated. Without a clear plan for advocacy and legislative action, even the most well-researched strategies may fail to gain traction. This aspect emphasizes the need for a coalition of support among lawmakers to ensure that the proposed policies are not only crafted but also enacted. 5. Implementation timeline and its implications. The timeline set for Q2 2024 is often mentioned, but its implications are rarely analyzed in depth. This timeline not only reflects the urgency of the proposed strategies but also aligns with potential economic shifts that could occur around that time. By focusing on this timeline, stakeholders can better prepare for the anticipated changes in the economic landscape. The completion of the framework by Q2 2024 may coincide with key economic indicators, making it a pivotal moment for policy advocacy. Recognizing this can help stakeholders leverage the momentum for policy change effectively. 6. Broader economic context. While Kyle Bass's strategies are often viewed in isolation, their significance is magnified when considered within the broader economic context. The ongoing trends in global markets, inflationary pressures, and geopolitical tensions can all impact the effectiveness of Bass's proposals. Understanding these external factors can provide a more nuanced perspective on the challenges and opportunities that lie ahead. Ignoring this broader context could lead to underestimating the potential obstacles to implementing his strategies. 7. Potential for alternative investment strategies. Bass advocates for inflation hedges and alternative investment strategies. Yet discussions around these alternatives often lack depth. The significance of exploring diverse investment options lies in the ability to diversify risk and enhance returns in an uncertain economic environment. By not fully addressing these alternatives, stakeholders may miss opportunities to strengthen their financial positions against potential economic downturns. In conclusion, while the summary of Kyle Bass's economic strategies provides a framework for understanding his proposals, several critical aspects warrant deeper exploration. The historical context risk assessment methodologies investment in research legislative mechanisms implementation timelines broader economic implications and alternative investment strategies are all significant components that can greatly influence the success of BASE's proposed Treasury policies. By recognizing and addressing these elements, stakeholders can better navigate the complexities of modern economic policy and enhance the likelihood of achieving long-term fiscal stability. 1. Risk assessment and analysis of national debt. A core element of BASE's economic strategies involves a thorough evaluation of the risks inherent in national debt and inflation. He emphasizes the importance of understanding the potential consequences of unsustainable fiscal policies, drawing on historical precedents to illustrate how similar situations have led to severe economic crises. This deep analysis of risk not only informs his policy recommendations but also serves as a cautionary framework for policymakers and investors alike. 2. Policy recommendations for fiscal stability. BASE advocates for stricter fiscal policies that aim to ensure long-term economic stability. His recommendations are grounded in a proactive approach to managing national debt and controlling inflation, suggesting that timely and decisive policy action is necessary to avert potential economic downturns. The implications of these recommendations are significant as they challenge current fiscal strategies and propose a re-evaluation of how governmental financial practices are conducted. 3. Investment in research and development. The allocation of a $1.2 million budget for research and development is a pivotal aspect of BASE's framework. This investment is designed to facilitate a comprehensive analysis of various economic factors, including the effects of monetary policy on Treasury yields and investor confidence. By prioritizing research, BASE aims to create a robust foundation for his policy proposals, ensuring they are data-driven and tailored to address the complexities of the current economic landscape. For implementation timeline and strategic planning, the structured timeline for implementing BASE's strategies is crucial for aligning his proposals with potential shifts in the economic environment. The goal to have the framework ready by Q2 2024 reflects a strategic vision that considers the dynamic nature of economic conditions. This timeline not only highlights the urgency of the initiative but also sets the stage for timely advocacy and possible legislative actions, ensuring that his recommendations are relevant and actionable in light of evolving economic realities. 1. The Greek debt crisis 2010 to 2018. The Greek debt crisis serves as a prominent historical case involving severe fiscal mismanagement leading to drastic economic consequences. Greece's national debt reached unsustainable levels, prompting the country to seek multiple bailouts from the International Monetary Fund (IMF) and the European Union (EU). The austerity measures imposed in exchange for financial assistance sparked widespread protests and social unrest. BASE draws parallels between the U.S. fiscal situation and Greece's trajectory, highlighting the risks of excessive debt and the need for proactive Treasury policies to avoid similar outcomes. 2. The Argentine economic crisis 1998 to 2002. Argentina experienced a profound economic crisis characterized by a collapse of its currency, a default on sovereign debt, and immense inflation. The country had pegged its currency to the US dollar, which initially stabilized the economy but ultimately led to severe restrictions on monetary policy. As debt levels soared and the economy stagnated, the government was forced to abandon the peg, resulting in a rapid devaluation of the peso and widespread poverty. This case exemplifies the consequences of unsustainable fiscal policies and serves as a cautionary tale regarding the importance of sound economic management, an essential theme in BASE's strategies. 3. The Weimar Republic hyperinflation 1921 to 1923. The hyperinflation experienced by the Weimar Republic in Germany is a historical example of the catastrophic effects of excessive money printing and fiscal irresponsibility. Following World War I, the German government faced enormous reparations payments, leading to the printing of large amounts of money to cover debts. This resulted in hyperinflation, with prices skyrocketing and the currency becoming nearly worthless. The economic turmoil contributed to social unrest and the eventual rise of extremist political movements. BASE often references this period to underscore the dangers of inflation and the importance of maintaining fiscal discipline in government policies. Future outlook: predictions for the implementation of BASE's economic strategies by Q2 2024. As we look toward the future, the implementation of BASE's economic strategies regarding Treasury policies is poised to have significant implications for the U.S. economy and broader financial landscape. Here are key predictions based on the current trajectory of his proposals and the anticipated economic environment leading up to Q2 2024. 1. Increased scrutiny of U.S. debt levels. By mid-2024, we expect an intensified focus on the sustainability of U.S. national debt. As BASE has emphasized, the potential risks associated with high debt levels will likely prompt policymakers and investors to re-evaluate fiscal policies. This scrutiny may lead to more stringent debt management strategies and a re-evaluation of spending priorities within the federal budget. 2. Shifts in Treasury policy framework. BASE's implementation framework is expected to introduce new policy recommendations aimed at mitigating inflation and enhancing fiscal responsibility. As these recommendations gain traction, we anticipate a shift in Treasury policies that could incorporate measures like stricter debt ceilings, reduced government spending, and enhanced transparency in fiscal operations. These changes may also aim to restore investor confidence in U.S. debt securities. 3. Rising inflation concerns. Given BASE's bearish outlook on U.S. currency and inflation, we predict that inflation will remain a prominent concern leading up to Q2 2024. Economic indicators may show persistent inflationary pressures, prompting the Federal Reserve to take a more aggressive stance on interest rate adjustments. This could further influence Treasury yields and the overall investment landscape. 4. Increased research and development investment. The allocation of $1.2 million for research and development is expected to yield valuable insights into the relationship between monetary policy and Treasury yields. By Q2 2024, we predict that the results of this research will inform not only BASE's proposals but also broader economic discussions, potentially influencing legislative agendas and policymaking processes. 5. Alternative investment strategies. As BASE emphasizes the need for inflation hedges, we foresee a growing interest in alternative investment strategies among institutional and retail investors. This may include a shift toward commodities, real estate, and inflation-linked securities as investors seek to protect their portfolios from the adverse effects of inflation. 6. Legislative action and advocacy. With the framework for Treasury policies expected to be ready by Q2 2024, we anticipate increased advocacy efforts to push for legislative changes aligned with BASE's recommendations. This may lead to collaborations between private sectors, think tanks, and policymakers to translate research findings into actionable reforms. 7. Market volatility and investor sentiment. As economic conditions evolve, we expect to see heightened market volatility driven by changing investor sentiment regarding U.S. fiscal health. If BASE's predictions resonate with a significant portion of the investment community, we could witness shifts in capital allocations impacting stock and bond markets. 8. Potential economic policy realignment. If BASE's framework gains traction, a realignment of economic policies could occur, focusing on sustainable growth and fiscal prudence. This may manifest as bipartisan support for measures aimed at bolstering economic resilience, especially in light of external factors such as geopolitical tensions and global economic uncertainties. 9. Public awareness and discourse. As discussions around U.S. debt and fiscal policy gain momentum, public awareness will likely increase. This could result in greater engagement from citizens regarding government spending and fiscal responsibility, potentially influencing future elections and policy debates. 10. Long-term outlook on U.S. economic stability. Ultimately, the successful implementation of BASE's economic strategies could pave the way for a more stable and sustainable economic environment. If proactive measures are taken to address fiscal imbalances, we may see a more resilient U.S. economy capable of weathering future economic shocks. In summary, the implementation of BASE's economic strategies by Q2 2024 is expected to have far-reaching implications for U.S. Treasury policies and the overall economic landscape. Increased scrutiny of national debt, shifts in fiscal policy, rising inflation concerns, and a potential realignment of investor strategies are all likely outcomes of this forward-looking framework. As the economic environment continues to evolve, the effectiveness of these strategies will depend on the collaboration between policymakers, investors, and the broader public.